This video will be positive, I promise you that, and I have a question for you. For the peak of the market in February 2022, how long do you think it will take for prices to get back to where they were in February 2022? Comment below how many months or how many years you think it will take for prices to get back to where they were before the rate hikes. Welcome back to the channel. My name's Tom. I run a real estate team here in the city of Toronto. And on today's video, we're going to talk about the 5 reasons why I'm actually kind of excited the market is shifting and changing and correcting right now in different areas. And we're going to dig really deep into why this is happening and where I think it's going to go moving forward. I mean, everything is based on interest rates. Interest rates continue to go up. The 5-year fixed rate is almost over 5% now. You got variable rates going over 3% from where they were at 1.5% early in the year. The Fed in the States just raised rates as another 0.75%, which they have not done in a long, long time. And typically we follow suit. So I don't think it's going to get better before it gets worse. It's going to keep getting worse before it gets better, but let's put this into perspective. And if you like this type of real estate content, if you could give this video a big thumbs up and subscribe and join our community, I really appreciate it. I've also had a really cool experience over the past year of really being consistent on posting these YouTube videos, helping a lot of you buy and sell property regardless of what's going on with interest rates or the market, because we come from it from a data first perspective. If you want to book a call with myself or anybody on my team, you can go into the first link in the description and book a buyer call, a seller call, or a call to chat about the market. Oh, I almost forgot. I launched a podcast. It's called The Tom Storey Show. It's on all the podcast apps you listen to. It's also available on YouTube under a new YouTube channel called The Tom Storey Show. I know, really original. If you want to check it out, go into the description. It will be there for you. New episodes every Sunday. So in no particular order, here are the 5 reasons why I'm happy that the market is shifting. Number 1 is that sellers have been spoiled for a long time, but really the last 2 years has been out of control. Expecting to have 50 plus showings on a property and 10 plus offers on every property that comes to the market, and basically everything that's being listed selling is not realistic. And it had been happening for so long that a lot of people just thought this was the norm. And we're going to go through a period of time right now where it is not the norm. In fact, things are changing very, very quickly, and prices have now dropped off almost 4 months in a row. And to answer my own question, which I asked you at the beginning of this video, how long do I think a seller will have to wait to get a February price again? In my opinion, minimum 18 months. Reason number 2, and this is something we talked about in the most recent podcast episode, is that life doesn't care what interest rates are. Life doesn't care what's happening with prices. Life is life. And when things happen in your life, people move. So whether people get separated, whether there's estate sales, if someone gets a brand new job, there are things that happen in life that regardless of all the fundamentals of the market, people need to move. And the reason why I bring this up is because a lot of people recently in my conversations are only talking about housing as an asset. Like, you got to live somewhere. And I actually heard someone say this the other day, which I thought was funny. When you're complaining about what the interest rates are right now on the property you own, just remember that interest on your rent is 100%, where interest on what you own is 5% fixed, or maybe just about 3% or more variable. This is something I had brought up in another video, but I looked back to the worst time we ever had in the history of the market, which was 1989. And 42,000 people moved that year. 42,000 people. Regardless of prices dropping the fastest they ever have, 42,000 people moved. Life moves on regardless of the market. People will buy and sell in any market. It brings me to my favorite way to look at the market. And I heard somebody say this once at a real estate conference. They said, the real estate market is kind of like the weather. There is no good weather and there is no bad weather. There's just inappropriate clothing choices. So right now you could argue for buyers, it's an opportune time. Or for someone that's trying to move up and sell to buy a bigger property, it's an opportune time. But someone that wanted to cash out of the market, this is not a good time. Someone that just bought a house in February, maybe this is not a good time. There was always 2 sides to every equation. Now, reason number 3, as a real estate agent, I believe the real estate industry was becoming oversaturated. I might take a little bit of flack for saying this, but there's too many realtors and there's not enough full-time realtors. More than half of the people with real estate license don't even sell a property a year. I don't think that's good enough. I think if you're going to be in this industry, you have to treat it extremely seriously. Like, I know so many people that I talk to on a daily basis like me that are like borderline obsessed with this. I don't think that there should be people that are just trying to dip their toe into the water in this industry. I think you got to be cannonballing into the pool and take this seriously. And the reason why I bring this up is because as market shifts and the overall pie of opportunity becomes smaller, there's going to be a lot of people that find it very, very difficult. And anybody that got into the industry over the past 2 years that thinks they've got things figured out, they're in for a real wake-up call. Now, I actually do believe the people that are very, very skilled will take over more market share than ever right now, because people right now need a professional. When only 25% of listings are selling, you need someone that can come in and tell you what you actually need to hear, not just what you want to hear. And my recent experience with this was in 2020 when condo prices dropped 6 months in a row. I took more listings than I ever had before, because you can't just trust your cousin. You can't just trust your friend that just got their license. You need a professional. And I think professional agents are going to take over, and actually it's going to increase the trust and the way the public looks at the industry when more professionals are doing more of the sales. A little bit of a rant there. I hope no one took that the wrong way. I think this will be a good thing overall for the industry. It will bring us up. Number 4 is move up buyers. I'm going to do this year. I've got my condo on the market right now. I will be buying a house because net, I'm ahead doing this now than I would have been doing it in February, because bigger properties worth more when prices are falling. They fall more percentage-wise. Now, on the flip side, they also go up faster if they go up percentage-wise more. But for move-up buyers right now, there is an opportunity. I know a lot of people that own a condo are like 2 or 3 years into a fixed rate, and it's low. Like you have a fixed rate like 2% or lower. So a lot of people are thinking like, okay, well, I'd love to keep those last 2 years of that fixed rate. Is there a way to port that mortgage over to the new property? And the answer is yes, you can do it. But if you're jumping up in the market, unless you have a massive down payment, you're going to need to find more money to come in there and get more financing. So blended mortgage rates may become a thing where you take the mortgage you had and another mortgage at the new rate and blend them together. But speak to a mortgage broker about that if that's something you are considering. If you're watching this video and you want to keep updated on what's going on in the Toronto real estate market every single month, go to torontohousingtracker.com. It's a website that I've just launched like 2 weeks ago, and it'll keep you up to date on what's going on with all different asset classes. All you got to do is pop in your email and you have access to all the information. And my number 5 reason why I'm actually kind of excited about the market changing right now is that the growth that we saw was unhealthy. And if we kept going at that rate, I really think something bad was going to happen. Now, you could argue to me, hey, Tom, something bad has already happened. If you bought a house in Milton or Brampton or other areas, there's one on my street right now selling for 25% less than I paid in February. Fair. But the way that prices were increasing, if they kept going even further at this rate, it was going to be tough. We were going to really, really crash. As of right now, prices have corrected. You've had borderline crashes, what does that mean these days? I don't know, maybe 30% or more. We've had borderline crashes in some communities compared to February, but across the board, specifically in the city of Toronto, prices have come down, but not significantly, not to make them quote unquote affordable. Like housing is still very, very expensive. And to buy $1 million house in February with rates where they were, your monthly payment was going to be about $3,300. Today, to buy that same house, depending on where you go, fixed or variable, your payment's going to be almost $1,000 more. So payments are up 20% from what they were, and that means you have less purchasing power, and that is the reason why prices are dropping from what they were. Thank you so much for watching this video. I really do appreciate it. If you have any questions, please throw them in the comments below. My name is Tom, and remember, home is where your story begins.